All right, folks. This is our midweek review for the ICT mentorship, and we're looking at the dollar index as our daily chart. All right, so we've taken out that low we were watching, traded into the imbalance in here, and we have a fair value gap there. So we rallied up into that today. We have holiday coming up next week. Volume's probably going to go light into the end of the week here, and what I'm watching to see is have we, I don't know, but have we created an important high here, a shift in market structure here, we're trading up into this to work lower into here and then return back to this order block. That's what I'm watching. Do we need to go back basically down to 101 level? I'm not convinced of that yet. I'm not trying to make the case strongly for it. I'm just going to present it with that likelihood here. Okay. So admittedly, this is one of those moments where I don't know. Okay. I'm going to give you the ideas that I think are likely, but that doesn't mean go in there and try to push it hard. If I'm being asked personally, because I try to teach that we're not trying to pick a top. Okay. I don't think if I say we're likely to go lower, that's calling this a top. You know what I'm saying? Like I'm looking at this range from this low up to this high, and we could dig down into a deep discount. So that return to that order block, that might be what they're trying to do. Okay, because I think there's a little bit of lift still for euro and cable, and we'll touch that when we get to those respective markets. All right, so this range here in this range here, that is that imbalance on the daily chart. So that way we can keep track of what we're looking at here. Admittedly, this presentation is going to be a lot more busier because of the lines I'm showing you here, because I don't generally have all this on here. But I kind of like want to convey as best I can what I'm seeing. So that way, hopefully, I'm not confusing you. But every level here, let me go one more time so you can see what's up. The low is that here, that thick blue line. Upper red line, lower red line. That's this candle here, this candle here. So that imbalance at SIBI. Upper level, lower level, the SIBI. The old low. And this is just an old imbalance. You saw that on your old commentary. So I just left it in there for a frame of reference. So we had buy side liquidity resting here. It swept that, traded lower, failed one more time to go above the high, broke lower, sell side liquidity resting below here. All right, on the 15-minute time frame, you can see we traded down into the imbalance here. So fair value gap there. Market went above, broke the swing low, fair value gap, trades up into it. A little sloppier than I'd like to see, obviously, but we broke lower once again, returned back into a fair value gap there, swing low, broke. Now, one of the things that is important is that we were looking for obviously higher prices on euro, and we were looking for higher prices on cable. You can see that happening with this short-term low being broken here, then creating a fair value gap, trading up into it, then selling off, attacking the sell side liquidity here, and down into the fair value gap. So this price run above that old level of imbalance, lost my train of thought there. 50, man, 50 years old, folks. You realize that? I'm just a couple months away from that. I have to be honest with you. It's starting to bother me. I think I got to go out and buy something. So we're down here in the fair value gap away from this high. That run right there, that is what you want to match up with your euro dollar and your cable and other foreign currency like Aussie dollar or whatever other currency you're looking at. But with this decline, that right there is a nice setup that confirms longs for foreign currency. It also does what? It allows lift to occur in the indice market. And that's why we were focusing on having a bullish bias on E-mini S&P and E-mini NASDAQ. All right, euro dollar daily chart. Here's that imbalance. We traded right up into that. I mentioned that on Monday's commentary. We went a little bit higher on Tuesday, traded back down into it. Hopefully, we'll see if this offers some support. And buy side is here if it's going to do a nice run up into a deep premium from high to low. This would be a really nice run. But we still have this a little bit more of this area. It's an imbalance. So don't get too wildly bullish. I'm not trying to push that or twist your arm thinking that's the likely scenario here. All right, so here we can see on the hourly chart, we trade down into that lower level here, discount low. And around that noon time, this offers what? A buying opportunity with that dollar index short. So that's it here. See, we trade down into it there. Small little buy side imbalance, sell side inefficiency. Order block, we trade into it there, rallies up, and we'll see if it wants to continuously move higher and break above the premium high. Cable, our imbalance, it's just crouching right below that. I think we're going to get a big range day here shortly and work up into this range, knock out the buy side. All right, and we had a break lower, rebalance that. So if it's rebalancing this much, we have buy side here. So watch that range up in here. There's a fair value gap I mentioned in the Monday recording. Just go back and look at your chart and you'll know what these levels are. Okay, and at noon we had an order block here, and here's that rally off of that sell in dollar. So we'll be looking for that to continue going into next week. Moving right along, keeping things short and sweet. Evening S&P, June contract. Here's our CIBI. Okay, we had a bullish run here last 2 days. And this is that session gap opening I mentioned on YouTube as well. Buy side liquidity here and buy side liquidity here. Rallied up, took buy side, traded back down into a fair value gap, order block, and then FOMC today rallied down into it, pushed back up, and then ran out the 39.80 level. Just fell short of like a 1.5 handles or so from the 4,000 level. There's that session gap opening. Buy side liquidity, buy side liquidity. From this low to this high, there is your equilibrium being pierced, so into a discount. It rallies, trades back down into a fair value gap here at FOMC, and rallies up to our objectives and does a really nice, handsome job of doing that. 5-minute chart. Here is that imbalance here, but refined on a 5-minute chart. Rallies up, takes the buy side, drops back down in. Look at the turning points here. 8:30. Look on your own chart too. 8:30, 9:30, 10:35. So 5 minutes late, but 10:30. And then we trade down into fill in this imbalance here, and we rally. Small little imbalance here. Fair value gap rallies and sweeps the buy side liquidity here, and then get up the ghost going into the latter portions of the afternoon. I want you to go into this because I'm not teaching this on YouTube. I will talk about obviously today in tomorrow's YouTube video. So I'll be reviewing it with the free mentorship group. This tail here, consequent encroachment, extended out in time. Okay, I gave this objective here, but before we get to the order block low, we have this. So that tail, split that in half. We treat it like a gap, consequent encroachment, and on the lower time frames, you have that. Okay, so I'm not teaching that over there, but that's why it went to where it went and didn't get to the order block. It went to a premium right nonetheless for us. And that, my friends, is going to be it. I will touch base with you, obviously, on Friday, week ending. Have all your videos downloaded, folks. I will send you a post in your respective user groups asking how you all are doing on Friday, so that way we can see where we're at, because we're about at the end of the run for hosting the videos on the server. Enjoy your day, enjoy your evening, and I'm sure I'll have a video, Lord willing, up on YouTube as well between now and Friday. Until then, be safe.